Are you ready to break free from average returns and secure your future in a world full of uncertainty? I know I am. And when I started this video, the goal was to build a portfolio of ETFs that's built to tackle today's unpredictable US policies. This up and down tariffs, are they going up? Are they going down? No one really knows, not even the US government. I also wanted to build a portfolio that can tackle this shifting interest rates, because interest rates are also tied to macroeconomics, what's happening in the US. So we don't know if interest rates are going to hold, go up, go down. It's a lot of uncertainty right now. Not to mention we have very high cost of living and stagnant wages. So I wanted to build and tackle these issues of today and tomorrow by building this all-weather portfolio of 5 ETFs. And what's the result? Well, I will tell you. VCN, this is going to give you your solid Canadian strength. VXC is going to open the door to over 11,400 global stocks. TGED and TUED is my secret sauce, boasting average annual rates of return of up to 17.4%, balancing income and capital appreciation. And this is all anchored by an ETF called ZGLD, which is going to be your anchor because it adds the stability of physical gold. This powerhouse blend isn't built to chase absolute maximum returns. It's built, like I said, it's an all-weather portfolio. It's built to protect you. It's built to protect your future, your family's future, no matter what the economy throws at you. So that way you can sleep easy at night knowing your portfolio's got you covered. As I always say on this channel, it's all about investing smart, not hard, and let's dive right into the details of each of these ETFs. First up is Vanguard FTSE Canada All Cap Index ETF, VCN. And honestly, I'm still a huge fan of VCN. In fact, I actually covered it as my top pick in 2024, and it's still a top pick in 2025, but with a bit of a twist. This is your trusty guide to the Canadian equity landscape. This ETF is going to be your tour guide tracking the FTSE Canada All Cap Domestic Index, so you're getting everything from the robust giants to all the agile small cap players in the Canadian landscape. You want to think of VCN as like your steady ship. With a medium risk rating, it is 100% invested in Canadian stocks, so every dividend you're going to get is going to have you humming, trust me, oh Canada, every time that dividend lands in. And who doesn't love a bit of patriotic payoff? I know I do. And honestly, VCN is a core holding even for me personally. What I really love about VCN is that it gives me almost like a VIP access to Canada's biggest names. I'm talking Shopify, RBC, TD, and more. You have front row seats to all the major headlines of Canadian business, of all the major Canadian economic players. That is an amazing thing with just one ETF. Now, even today, as we face all these uncertain macroeconomic factors, this unpredictable US government, stuff about tariffs, interest rates, you name it, stagnant wages, rising cost of living, right? There's so many global issues in play. And that's what I really love about the beauty of VCN, because it becomes a cornerstone, a bedrock of every Canadian portfolio, because it's going to anchor you in the Canadian landscape. And how does it do that? Because it offers a diversified mix to all resilient sectors, from the energy to financials to tech innovators, offering you a cross-country journey through all of Canada's industries, from coast to coast to coast, all the way from the mountains of BC, covers the prairies, covers Ontario, Quebec, covers the Maritimes. Honestly, this one ETF is your true bedrock of Canadian strong businesses. And that's not it. With all these global jitters, these companies are built to adapt because they have a foundation of stability as part of your portfolio. With interest rates up in the air, thanks to VCN's large cap focus, you're going to get a cushion for your portfolio, thanks to a solid stream of cash flows, thanks to diversified revenue streams that each of these businesses that have to offer in Canada. It's going to keep your portfolio steady and my portfolio steady every time that market shakes. I'm very excited to talk about this next ETF. This is the Vanguard FTSE Global All Cap X Canada Index ETF. It's a mouthful to say. Short form is VXC. And this is a great choice if you're looking to invest outside Canada in 2025. This ETF is going to give you easy access to global stocks by tracking that FTSE Global All Cap X Canada Index. What does it really mean when I say FTSE All Cap? It means it's going to include the big companies, the small companies, the mid-sized companies from all around the world, excluding, that's why it says ex-Canada, excluding Canada. So that's why you have VCN, that's your Canadian pick. Then you have everything else ex-Canada with VXC. And here's a fun fact about VXC and why I'm a big fan of this. Just by holding VXC, one ETF, you're actually holding a basket of over 11,400 stocks with just one simple package. You want to think of VXC as a key to a global treasure chest. Every dividend you receive is like finding a valuable gem that adds to an exciting collection of international opportunities as part of your portfolio. And think of this concept. Each payment, each dividend you receive from VXC every quarter, this is a collection of payment from over 11,400 companies around the world working hard for you, and you can do nothing except hold VXC as part of your portfolio. Over 11,400 companies paying you that dividend check every single quarter. And that's why no matter in uncertain economic times we're looking at today, VXC is going to hold its own ground. And if you break down VXC even further, it offers a mix of stocks that covers many regions and many sectors. From the tech leaders of Silicon Valley, from the strong banks in Europe, and those major manufacturers in Asia, you are covered. Plus, you're going to get built-in diversity that protects your portfolio, because if one market, one sector struggles, well, guess what? The other sectors, the other markets are going to pick up the slack. That's the beauty of holding a globally diversified ETF as part of a cornerstone strategy of your portfolio. So if you're ready to expand your international investment horizon without the hassle of figuring out which international stocks you want to pack as part of your portfolio, VXC is your ticket. And why not? Why wouldn't you want to embrace the global market? Let your portfolio capture opportunities from all around the world. It's a big world out there, and Canada only makes up 4% of the global economic workforce. So if you don't have something like a VXC, you're missing 96% of global opportunities. And VXC solves that problem in one simple package. This is another ETF that I'm very excited to talk about, and this one is called TGED, which is a TD Active Global Enhanced Dividend ETF. And this is a unique ETF because it's perfect for those looking to go beyond simple capital growth in 2025. TGED, what makes it so special is that it delivers strong dividends alongside the power of capital appreciation. It's posted close to a 14% annualized rate of return since its launch. Compare that to the average TSX rate of return around 7-9%. This shows that if you're just relying on the Canadian market to provide for your capital return, you're going to miss out on much higher capital gains by excluding something like a TGED as part of your portfolio. And that's why, honestly, I'm a big proponent of don't just limit your portfolio to Canada. Don't just limit to 4% of the world. Go outside of Canada. There's much better returns. There's much better cohesive returns to be had as an all-weather portfolio. And the beauty about TGED is acts as a income generating engine for your portfolio with a global twist. It targets high quality companies that pay steady dividends and that have a solid track record even in unpredictable markets. So with TGED, you're not just getting familiar domestic names, you're opening the door to a world of opportunities that deliver strong dividend income and capital appreciation. So what sets TGED apart from its competitors, from other ETFs and stocks? Well, like I said, this is a global income engine. It's going to focus on companies that offer a mix of solid dividends plus strong total returns. So you're getting the best of both worlds. Not to mention the sector exposure. If you look at it, you're getting a strong weighting in the financial services, technology, and consumer services. These are the engines of today's modern economy. Plus geographic diversity. You're going to get a big exposure to the US, a big exposure to Europe, and you're going to get exposure to Japan as part of the top 3 geographic exposures. And not to mention, some of the biggest names are part of this ETF: Apple, Microsoft, Nvidia, Amazon, JP Morgan, Costco, and a bunch of others. So you can see why this is such an amazing ETF to hold, because you're getting big powerhouse names that deliver on both fronts, income and capital appreciation. TGED is honestly a very exciting pick that to me stands out in today's dynamic economic climate. Let's now shift our focus to another ETF, my fourth pick, TUED, which is the TD Active US Enhanced Dividend ETF. And this is a distinct option that adds a new flavor to a portfolio compared to the other picks I've talked about. Unlike VCN, VXC, and TGED, which offer that domestic and global exposure, TUED is going to laser focus on the US market, specifically on companies in the US market that offer strong dividends. Similar to TGED, TUED also looks to generate a combination of consistent income and capital appreciation. The major difference is that TUED is going to focus on the US market, where TGED focuses on the entire globe. And the way TUED is going to differ itself from other ETFs is that it actually employs an active management strategy, which goes beyond simply tracking a passive index, because it's going to carefully select quality stocks that are not only designed to reward you with higher dividends, but also have a strong record of capital appreciation. So in a nutshell, here's why TUED stands out from the rest of the crowd. And last but not least, this is an active US strategy. You're going to get high quality picks that focus on the US market rather than just following a passive index. Not to mention, it has an impressive track record of an annualized rate of return of over 17%, and this precision in targeting the best dividend paying companies the US has to offer. To me, this is another foundational pick if you're looking for direct exposure to the US market. You want those dividends and you want capital appreciation. Now let's round out our investment discussion with an alternative to the equities. And that is a precious metal that a lot of people love, and that is gold. So I want to talk about the ETF, the BMO Gold Bullion ETF, known as ZGLD. And this ETF is designed to replicate the performance of gold, net of fees, net of expenses, by investing in long-term holdings of unencumbered gold in the form of 400 troy ounce international bars. And if that didn't catch your attention, what makes ZGLD unique? Direct exposure to gold. You're actually going to hold physical gold, and ZGLD gives you direct access to the price of gold. So instead of relying on speculative market maneuvers or short-term trading, this ETF is going to faithfully mirror the performance of gold over time. And gold is a bit of a diversifier as well. When we talk about diversification, typically you'll hear about make sure you have diversification across geographies, right? The US, Japan, Asia, etc. Make sure you have diversification across different sectors like your financials, consumer, tech, healthcare, etc. But diversification also means going outside of equities, going outside of the stock market, and that is gold. And gold has for a very long time been considered a safe haven, and in fact in today's dynamic market in 2025, it's still considered to be a safe haven for an alternative against equities. A lot of people, when it comes to volatility, uncertain economic conditions, they typically will start adding more gold to their portfolio because gold is a tangible asset, right? You can touch and hold gold. And that's why with ZGLD, you're adding a tangible asset that can actually buffer against inflation and provide a little bit of buffer against volatile market economic conditions. So in short, if you're looking to diversify beyond the equity market and add a stable, historically resilient asset to your portfolio, ZGLD is going to give you that straightforward path of owning physical gold. So instead of you having to go out and figure out how to buy gold bars, just hold an ETF that tracks the performance of those gold bars. This is a perfect complement to the equities, especially during uncertain economic times. It's going to provide a hedge against instability and a means to preserve value over the long term. That was a lot of information, 5 ETFs covering everything from domestic, global, gold. So as we wrap up, what can you take away from this discussion? Well, what I want to show you with this chart is that if you look at the top, I've sort of listed different ways to compare and contrast these ETFs. The objective of each ETF, where does it focus on in terms of geography? What's the strategy? Does it focus on income or growth or a bit of both? And what is the unique benefit of each ETF? The point is that if you have a lot of ETFs, or if you're looking at different investment opportunities, how do you know which one to add to your portfolio and how much? You want to lay it out in a format like this. So in one snapshot, you can compare. Maybe you want a little bit of this, a little bit of that. So when you're building this all-weather portfolio with these 5 ETFs, you're going to get VCN, which is going to provide you with that diversified exposure to the Canadian economy. It's going to be a core holding for your portfolio if you're looking to invest in Canada's economic engine. By including VXC, you can get international exposure in your portfolio and over 11,400 stocks working for you day in, day out, giving you that global access to the equity market. TGED, TUED are the dividend plays, balancing income, balancing growth. TGED is your global pick all around the world, where TUED is going to focus on the US market. And obviously you have ZGLD that I talked about, which is going to give you exposure to physical gold, a tangible asset that acts as a safe haven during economic uncertainty. So by including gold, you're effectively adding a hedge against market volatility and inflation, while adding this is the key part here, a non-correlated element to your overall investment strategy. So in a nutshell, that's how I summarize the benefit and the differences of each ETF. So now how do you take that and actually build a portfolio? So as you're investing, you want maybe one or two things, but it generally comes around, do you want income, do you want growth, or do you want a combination of the two? If that is your objective, then TGED, TUED are going to shine because they focus on dividend investing with a complementary capital appreciation to the mix. Meanwhile, VCN, VXE, this is broad market exposure with different growth profiles, and ZGLD, that is going to preserve value during market downturn. Now, if you're looking at geographic exposure, VCN, we talked about this is Canada's economic strength. VXE, TGED are going to give you global exposure, and TUED is going to laser focus on the US. And the performance track records are quite impressive when you look at some of these strategies of TUED with over 17% and TGED around 14%. So they highlight the potential upside of dividend-focused strategies. Meanwhile, VCN, VXE are going to provide you with that steady market exposure, and ZGLD is your hedge against everything against uncertainty. And that's the point of why I'm calling this an all-weather portfolio. This mix not only spreads risk, but it's also going to position you to capture growth and income in various market conditions. When comparing and contrasting these different flavors, you want to consider your own risk tolerance. You want to consider your income need. Maybe you can afford a little bit less income for more growth. Really, you have to figure out what you're looking for and then tackle the ETFs to complement your strategy. And this balanced strategy, I would say, allows you to invest smart, not hard, sit back, and just let the global world of companies do the work for you. Now, before you make any move, remember, investing is not about finding a one-size-fits-all approach. You have to do your own due diligence, your own homework. Do these ETFs make sense for your risk tolerance? Do these ETFs make sense for your risk profile? And don't forget, when it comes to investing, keep a long-term focus. So thanks for hanging out with me today. If you've enjoyed this video, if you've enjoyed this breakdown, make sure to give it a thumbs up. Subscribe if you haven't already. I also have some curated resources for you to check out in the description below, so definitely do check that out as well. And I'd love to hear your thoughts about these ETFs, or maybe what kind of investment strategies are you looking at that maybe I didn't cover in this video. So let me know in the comment section down below. That's all for now. I'll talk to you in the comment section.